I may not always love you, but long as there are stars above you, you never need to doubt it. I'll make you so sure about it. God only knows what I'd be without you. If you should ever leave me, well, life would still go on, believe me. The world could show nothing to me, so what good would living do me? God only knows what I'd be without you. Dun dun dun, bum 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 bum. All right, great, fantastic. I need to drink like 3 gallons of like honey lemon tea before I try those falsetto notes. It just doesn't work out otherwise. Okie doke. So today's video is about the credit score. Definitely an important video. And one that I have a strong opinion about. Okie doke. So background for the credit score. When you have interactions with debt, so if you get a credit card or you make a payment on a credit card, or you close a credit card account to get a loan, make a payment on that loan, pay off that loan, this activity is reported to credit bureaus. And there are 3 main credit bureaus: Experian, TransUnion, and Equifax. You may remember Equifax from the news scandal. You may remember Equifax from such news scandals as the massive 2017 data breach, where they exposed the personal information of over 14 million people. And, that's irritating because we don't have control over what credit union gets our information. The system is fixed, which means that, Equifax doesn't feel as much pain as they should feel from having really, really poor security. So, if you have a credit card, student loan, or a mortgage, these credit bureaus are going to have your information. Nothing you can do about it. The credit bureaus compile the data about what loans you have, how they're paid, and then they summarize it in credit reports. These same companies, and then other companies as well, use these credit reports to create credit scores. So, for example, there's a popular score called the FICO score, and that's produced by a company called the Fair Isaac Corporation. There's another score called a Beacon score, and Equifax is the one who produces that. There's also a score called the Vantage score. It's produced by Vantage Score Solutions, LLC, and that is owned jointly by the 3 main bureaus, Experian, TransUnion, and Equifax. There are other scores, one called the CE score by CE Analytics. There's also Check Systems, PRBC, Credit Expert, LexisNexis, and there are like different sub-scores. There's like different versions of each score. So you got like FICO 1, FICO 2, FICO 4, FICO Classic, FICO Classic 4. I mean, like just stupid variations on these things. There's one called the insurance score that uses a subset of this information to try and be predictive of your likelihood to get into a car accident. The scores come from the data that's in the credit reports. So typically the scores are going to look at your payment history, late payments, missed payments, the age and type of credit that you have, the percentage of your total possible credit used, the total debt balance, recent credit inquiries and account openings, and the total amount of available credit. Credit score services and credit cards are marketed everywhere online because they are really profitable. And I gotta say, this is a cancer in the personal finance industry. If you look at Personal Capital, if you look at Mint.com, even if you look at a lot of the financial bloggers who are ostensibly trying to help people, they are pointing people towards opening new credit cards. And one way that they do that while trying to say that they're going to help you is they say, oh, you can raise your credit score by using a card in a certain way. Here's an affiliate link to open up a card, so I'll get a kickback when you open up that card. And as a result, the financial education space is polluted by this crap. And there's a lot of people who have misconceptions about what the credit score is doing for them and what it's measuring. So here are some U.S. debt statistics that are pretty recent. I wanted to show you this because I wanted to show you how profitable it is to sell credit cards. So, total owed by average U.S. household carrying this type of debt, $15,654. That's not too far from the $16,000 that I had. And I can tell you, when you owe $16,000 of credit card debt, you're paying a few $100s in interest a month. That's why it's profitable. That's why they want to sell you on this crap. All right, and here is a quote from a Bloomberg article. While there are competing models, almost anyone with a credit card knows that a number typically ranging between 300 and 850, the credit score, holds huge sway over their financial life. This is a load of horseshit. It's just not true. But articles like this, claiming stuff like this, are everywhere. And as a result, people are very confused about kind of the role that a credit score is playing in their financial life. Let's look at this article now if we're going to quote from it. I like the animation. I think that's cute. All right. Rage. I actually get happy every time my credit score goes down now because I think it's ridiculous. All right, they talk about this nerd who decides he's going to get a perfect credit score by messing around. And that's what he's spending his time on, is trying to get a perfect credit score. All right. And then the growing ranks of the credit score elites. So we can see that from 2005 to 2017, this is slowly moving upward. Well, you know what's not moving upward? The number of people successfully retiring. That's going down at the same time this number is going up. Don't know if they're related, but that's what the reality is here. And let's see. Okay, they talk about, if the credit score can be gamed. And of course, the person from FICO says there's no evidence of score gaming. Of course, the credit score company would say that. Otherwise, their credit score would be broken. And apparently more and more credit scores are going up. The quest for the perfect credit score is part of our Western competitive edge. It's a competitive thing. Someone who's interested in competition wants a high score. Credit scores reveal an individual's relationship skill and level of commitment. Really? Holy crap. So, yeah, this is the type of stuff that's in the media that I find ridiculous. You don't need a credit score. That doesn't mean that I think you should have a bad credit score, because typically a bad credit score, a really bad credit score, is going to be reflected because you missed payments, you defaulted on debt, and you're not organized. I don't believe in that. I think that if you have old debts, you should, put them in line to be paid off in your debt snowball. And if you have missed payments, you need to address the organizational issues that are causing you to not pay your stuff on time. But that doesn't mean you need a credit score eventually. It just means, if you have a bad one, you need to fix the problems that are causing it to be bad, regardless of whether there's a score, because you can be sued for defaulting on debt. I want to cover now the reasons why people specifically say that you need a score or a credit score is important. Number one, they say to get certain jobs, you need a credit score. That's not actually true. Generally speaking, when a job is looking at like your credit history, they're looking for responsibility in terms of making payments. So it's not the score they want, it's the credit history. So if you have no credit history because you're not in debt, then there's no red flags for them to see because there's no history. So, if you went to apply for a job and they said, oh, we can't offer you a job because we don't see that you have any debt, what kind of company is that? That's ridiculous. If that's their measure of employee talent, I'm not sure you want to work there. So no company has ever asked for my credit score when applying for a job. I think that reason is crap. Needing a high credit score so you can have a credit card for emergencies. Well, I don't believe in having a credit card. I think you should have an emergency fund for emergencies. So you definitely don't need a credit score for the credit card that I think would hurt you. So that reason is off the table. To rent a car, you need a credit card. That is also not true. I've rented cars every single year. And since my credit score has been going down, and I've never had any problem renting a car, and I've always used a debit card to rent the car. So you don't need a credit score for car rentals either. You can use a debit card. To get car insurance. Okay, so there is, as I mentioned before, it's not technically a credit score. They call it an insurance score, but it's based on the credit report, that they've found a correlation between, this score and the size and number of claims that a driver is likely to file. So you will pay more money in car insurance if you don't have a credit score. But because you're paying so much less money in interest, because you don't have debt, overall you're coming out ahead with the no debt system. So I'm not worried about, paying a little bit more in terms of car insurance when I'm saving so much money by not paying interest to the banks in the form of, because of debt, the interest to the banks from having debt. Okay. And then the final one, which I think is the one that has the most credibility of any of the arguments, would be to get a mortgage. And the reason is that if you don't have a credit score when you go to get a mortgage, you're going to have to go through a process called manual underwriting, which is a pain in the butt. So what you need for manual underwriting is like 2 years of pay stubs, 2 years of bank statements. Basically, you need your financial records so that someone at the bank can go through your income and your banking behavior with a fine-tooth comb and then qualify you for the mortgage that way. When I applied for my mortgage, I had a credit score, but I gotta say, they went through everything with a fine-tooth comb anyway. And I had to show them that I graduated from college. I had to show them all my, 2 years of pay stubs and bank statements and tax returns and everything. So I'm not sure, I guess, that having a credit score will save you from a manual underwriting process. Now, given I got my loan in 2009, and that was a very nervous time for Bank of America, who I got my loan from. But point is, when you go for a mortgage, a lot of places, the first thing they're going to do is run a credit score. If you don't have a credit score, you're going to have to go through a more annoying process to be approved for the loan, but it's very doable. You just need to save those documents and have that paperwork organized. So I'm telling you right now, if you think home ownership is in your future, go out, buy a folder, and every time you get a bank statement or a pay stub, stick it in that folder, and then just keep it all in one spot. If you have a debit card with a Visa or MasterCard logo, like most people in the US, then that card can be used at all the same places that a credit card that is Visa or MasterCard can be used. And even when you run the transaction, checking out the grocery store or whatever, you can choose to run it as a credit transaction or a debit transaction. So you don't need a credit score to have a credit card for that reason. Like, the debit card is just as convenient. I've been doing this for 4 years with the debit card. Debit card has never let me down. I'm very satisfied with my debit card. Credit scores don't contain any information about your income or your net worth. So it doesn't measure wealth. And as a result, having a good one doesn't help you in the same way that having wealth helps you. You can't eat it. You can't live in it. You can't pay a medical bill with it. If you finish up your life with no wealth and a fabulous credit score, you are going to be broke, and it's not going to matter. And I guess just to drive this point home, I want to show you how my credit score has changed over time. So what we have here is we have a history of kind of my life from when I bought the condo, and I went back and I looked at the paperwork. My credit score was 681. It was a little low. I had missed a medical bill I didn't even know existed, and I'd been moving around so much right after college that I never got the payment notice or whatever, so that brought my score down. And I was also, I didn't have that many years of credit because I wasn't that old, period. So 681. And at that time, my net worth, I'm going to call 1. I'm not going to say what it was, but let's just call it 1, okay? Now, I refinanced in 2014, and they ran my credit again after 5 years, and I had made all my payments on time. Credit score got up to 816. And so I felt pretty good about myself, and I said, to a financial advisor, I said, "Oh, I've got an 816," and he said, "Sounds like you're paying your bills." It was very dismissive, and I was thinking like, oh, this is like I'm really excited about something that is not important at all. Because this guy spends all day with finance, so clearly he's not, he knows what the deal is with credit scores. And, the real estate market had improved a lot between 2009 and 2014, so net worth was up, but I had this debt that was, associated with this credit score. How do you think I got such a good credit score? I had a bunch of credit card debt, and I was making payments on it regularly. And so I refinanced, and 2014, remember, that's the year when I really just decided to, kill all of the consumer debt and not have any credit at all and focus on building net worth. So the following year, I had paid off all of this credit card debt, and my score dropped from 816 to 744. But my net worth had gone up from, 11 to 15. Well, that's nice. And, I just kept doing responsible things from 2015 to 2018. I paid off my mortgage, and I kept saving as much money as I could. After I paid off my mortgage, my score dropped from 744 to 649, and or actually 648, and then this month it went up by 1 point. Woo! So now I'm hanging around 649. Net worth has gone, up again to 25 because I've been consistently saving, and the investment market has done well. The housing market continued to do well, and so point is, like, credit score is lower than it's ever been. Net worth is way higher than it's ever been. So we can look at this, right? Like, credit score can go up, it can go down. Net worth's been going up the whole time. In fact, as the credit score went down here, the net worth actually, that accelerated for a bunch of different reasons. But the final one is just going to show you what the chart looks like when I correlate my net worth with my credit score at different times. And this is like the fit line. So, here's my credit score. So as the credit score goes up, net worth goes down. Now, look, I think this line is BS because I know there are ways to engineer this where you can make it go up or whatever you want. it to do, really, because making those payments on time and building net worth are separate things. But that's the point. Okay, making debt payments on time, or gaming these credit score systems, and how much you're able to build your net worth are completely separate things. And so I don't want you to get distracted by credit scores. I don't want you to care about it, because I want all your attention focused on building net worth. Because when you the earlier you do it and the more you do it, the wealthier you're going to get, and you're going to hit that net worth number that gets you to financial independence. So it's an emotional choice. It's one of those psychology things. But yeah, basically, if you adopt the attitude that you want to get rid of all your debt and you don't care if you have a credit score, that's going to leave you free to focus on these other things that actually matter, like how are you going to increase your income, how are you going to save more, and how are you going to grow your net worth, how are you going to invest your money more wisely. And yep, that's pretty much it. The more of our when we take eggs out of the credit score basket, we get to put them into our net worth basket, and the more emotional eggs we have in our net worth basket, the wealthier we'll get. That's it. All right. Hope you enjoyed the video. Hope you had a great weekend. Yeah.